Hello there. This is a market update for the week of April 1st. Another good week for bulls. They managed to score like 37, 38 points. And what is important, made another high in another higher high on intermediate time frame, which is good, and also moved a little bit above this downtrend line. Okay, so these are good bullish signs, at least for the intermediate and short time frames. But let's see what is gonna happen with the long term. So we're not gonna have an answer soon. I mean, we may have an answer if the market moves down. That's will this will strengthen the point that this is the beginning of another bear market. However, on the upside, for the bull market to resume, actually, we need a big high above this 2130, at least, let's say 2200, something in that area, which is what, another 230 points away from here. So we still have the bearish signal, which in my case, according to my strategy, so the moving average on weekly is 30 and 60. As you see, they cross, they give a bearish signal. They didn't reverse the signal yet, despite this huge move. So long term, very long term, I'm still on the bearish side. Okay. I was asked, why I'm so bearish on the long term when it looks like what's different. This is just another correction. Okay, why is this different? So so people who follow me from the very beginning, or who watch my website for years, know exactly what I'm talking about. But for newer guys, let's remind quickly, do a reminder what's my trading strategy. So I have this pair of EMAs, so this is exponential moving averages, not single moving averages. Okay, so I'll show you on the bigger picture, like 20 years ago, why I choose this. So the main thing is when these guys cross on the downside, I'm getting bearish, and I have a confirmation from this single moving averages. But the main thing is the EMA crossing. Okay, so this is one thing. So why is this different? Look why. You see, this. I had the bullish crossover here. Okay, that was the signal that the new bear market started. Okay, for sure. Okay. And again, this small 120, except this at the beginning, which is normal, it's nothing big deal to be challenged at the very beginning of the uptrend. Okay, but then look, was not even challenged, not even cross until here, until in August we moved actually below this, but it closed above. So which is I'm taking the closing value. So look what happened. So we had another move on the upside, but didn't manage to make another higher high. Not even that. It stayed a little bit, and another leg down. Big leg down. We had another big leg down, in here, and this moving average is crossed. Of course, we're back to not back, but anyway above at least this moving average. Which is okay to be crossed, to be challenged, and even crossed at the beginning of the downtrend, but I'm skeptical because I don't see I don't see market making another higher high. Okay, which is what, it's like almost a year when we had this. It was in May last year. Okay, so, and again, it's a pattern of big, significant, lower highs and lower lows. Okay, so so that's what the difference between this small move on the downside. I know I know what people are saying. I know why they don't trust. I had somebody say bears was screaming bloody murder every this score, and they were wrong every time. So market eventually moved down. Yes, it's true. Just because somebody says is gonna go down, it doesn't mean it's go down or a new bear market starts. Okay, so that's come with the experience to realize when is this a real correction and when it's something serious. And now, trust me, guys, this is really serious what we're seeing in here. Okay, so we had this huge rally in here as well. You know, look on the last downtrend. Okay, well, again, I had this crossing, okay, bearish crossover. Small 120 was something around here, I guess, like 1380 if I remember correctly, something around here. So again, it was crossing on the upside. This is a huge rally. This is 10% rally here. It may not look that way in here, but this is a huge rally, okay? And people again, I remember people saying the same. We are pretty close to the all-time high. It's no big deal, okay? And why this is a problem? Well, it was a problem, and I don't, you know, this is strictly from a technical point of view, you know. So, so that's why I say we need to be very careful here. This may be the beginning of a very nasty move on the downside. Okay. Let's have a look. I mean, again, for new people who ask me these questions, I want to go back and look a little bit. So this is weekly. Look a little bit on the past for the other beginning of the bull or bear markets, you know, in the last 20 years. So I can make better my point. Okay, so this is weekly, which means on 5, it takes into account only the trading days. So this is 5 trading days, and now I'm moving to 9 days. Okay, 9 trading days. So that means all these averages need to be divided by 1.8, you know. And I already made the calculation. I showed you before. This is around 67. This is about 33.3. I'll round it to 34, and this half of it is the 17. Okay, and now we can look a little bit back. We can go to 2000 actually. Okay, so let's move on a little bit. Okay, so again, I cannot see back then, but look here. I had a bearish signal. Okay, I need to see a little bit. It was on the downtrend. Okay, below, I think the small 120 was challenged somewhere in here. Okay, so again, we have this huge rally again in here, and probably at this point, people again are questioning why is this a bear market? What's different from other points when the market went down and eventually made a higher highs? And that's why I think charts are important, okay, because it gives you a better picture of what is going on in there, okay. Otherwise, I don't know how people decide. How people decide to do. I mean, the little guy, not the big guys who have a lot of inside information, you know, and this kind of stuff. You know, for us, little guys would try to figure out which way the market is going. Okay, so this was the sell signal anywhere in here. It doesn't matter. Okay, I mean, it does. It's 100 points plus or minus, but on the big picture, it doesn't matter because it went to 840. Okay, so even no matter where you shorted the market in here, or at least sell your longs in here, let's say in here. Okay, it's was a good entry on the bearish side. Okay, so and then again here I have the move on the upside again, and people bears this time were questioning and say why this is gonna be a beginning of the bear market when we have all these failed attempts to move on the upside, and then we had lower lows. Okay, that's the problem. That's how people who understand technical analysis make their decision. Okay, so this is actually bullish. Okay, and look at this 120 moving below. Okay, and again we have definitely that was a bull market. And now we have all of this. This is a weekly chart, so 9 days. Sorry. So these are big moves on the downside. Okay, and again, you should buy all of this because the main trend was already up. Okay, so that's when you buy the dips, not in here. You don't buy the dips in here. Okay, you sell the tops actually, you know, instead of buying the dips, because you buy the dip in, you say I'm buying the dip, but the dip could be anywhere in here, in here, in here, in here. You have no idea how how much will go on the downside. Okay, so so let's see what happens. Moving averages, no sign of crossing this small 120 is not even challenge. Okay, then we come here. This is 2008. Okay, 2008 we had this bearish crossover. Look, now I'm, as I told you, that like this 120 was challenged in here, was below. Then on the upside, they move above that. However, when another move on the downside below this 120, that was the deal. Okay, that was the deal. So if this happen now, I see that will be the moment where I should go all in, you know, on the bearish side. So I know, I understand why people psychologically, why bulls, for them especially, it's very hard to admit that it's a bear market, because the most of the time market spends in a bull market. Okay, 80-90% of them. So the bear markets are much shorter than the bull markets. They're very violent. Okay, but they're shorter. So people know from previous experience that most of the time they will be right time wise. I mean, compared to the bears. So that's why this confidence goes on and on. So again, you can look at this and figure out for yourself. If you have a different approach, that's fine by me. I mean, I'm just sharing with you what I learned over the years and why I make these signals. I prefer to decide myself, not to listen to other people, you know, what they're saying. Okay, because at any given moment, these big guys, okay, look on Bloomberg, look on Market Watch, look wherever you want, and see big guys who that's their job. Okay, to understand the stock market. At any given moment, you'll see one which is bullish and one which is bearish. Okay? So which one? How do you decide which one to go? Okay, they're specialists. They're supposed to be on the same side almost all the time. Okay, not split 50-50. Okay, and that's why I came up with this. And trust me, it helped me a lot. It's not 100% accurate. It's like 60, 70, sometimes 80% accurate. But this is good enough for me. Okay, to have an edge over the other people who blindly trade. So let's go back to 5 days. Okay, change back this. Let's change back to 30 and 60. Let's have the same picture. Okay. And this the 120. Okay, let's see what else. So at the moment, you know, that's the deal. That's the thing which we should watch. What I will watch, you know, if it's a move on the downside below this small 120, when already I have the bearish crossover, it's a done deal. Okay, I made a mistake, and I show, despite the fact that I preach to you every day, do this, you know, this is a classic case. Do what I say, not do what I do. So I got anxious here, and I say I'm too much. I want to go in. So I say this is gonna stop that. It is always a stupid things to anticipate where the market will turn. Okay, so and I got a little bit short in here. Thanks God after that. So I'm like 100 points lose. I'm on the losing side in here. Okay, thanks God I haven't done the second most common mistake that people do. I say, okay, I'm so sure. So they still go short, and eventually by the time you go here, you have all your money invest on the short side, say in this case, and wait for a miracle to go down. Okay, because if this continue to move up, you'll be screwed. Okay, so what was important, for my strategy, and I mentioned I want to see a move here, stop somewhere, then a strong move on the downside. Probably I'll go again on the same 980 on the 19 on S&P, but it's very important to short the market when it's moving down, not when it's moving up. Okay, exactly the other way on the bullish side. Okay, so it could go, honestly, it could go in favor of bulls. Remember, they have the Feds on their side, okay? But unless I see a 2200, no, absolutely not. I'm not gonna move 1 cent on a bullish side unless I go for short term. Of course, these are huge opportunities in here. Okay, we're talking about, if you count the waves down, up, probably we're talking about 1,000 points on S&P 500. So if you even manage to be on the right side half of the time, to score like 500 points, it was still very, very, very good for you, But I'm looking here at the bigger picture, really, really long term. It's a bull market. It's still a bull market, or continue to what is the start of the bear market. So I'll stop here, and let's see how we'll develop this week, and from there we'll take another decision on the up or down. Okay, thank you guys, bye.